Hello everyone, I'm Chip Watson. I'm a housing counselor with Orange County Rural Development Advisory Corporation, and this is Nilda, and she is an intake specialist at the same organization. And what we're going to do today is we're going to go through what it takes to put together an intake packet for a modification. So we're going to go over all the paperwork, but we're going to go over it as a client and a counselor would do, so that you have an idea of what to expect from this packet when you receive it. And so it isn't that scary. It's just they want information, and we're going to tell you how to get the information. Okay, so Nelda, the first thing you have in your packet is an authorization form, right?
Yes, I do. And I have a question.
Yes.
Do I put my name and my husband's name on this? Or is it only my name because I'm the only one on the mortgage?
If you're the only one on the mortgage, then your name should be the only one on there. But if your husband is going to call for information about, you will have to do an authorization for him as well. So at this point, since it's just your name on the authorization, you're going to sign with your name, and then down below it, there's going to be a counselor's name. And if you want your husband to be able to call in for information, then you will have to release his name, because he has no responsibility for this mortgage. It's just all yours.
Okay. Alrighty. That's
so
good. Okay.
The next form we have is called an RMA. And this is the actual request for a modification that you're going to submit to your mortgage company. Now, the one thing that's very important about this particular form is fill out every spot on this, because they want to know your name, they want to know your address, your social security number, the whole works, any contact information, your email address. Do you actually want to keep the house, or do you want to sell it, or what is your plan for this house? So it has a lot of questions on here and a lot of boxes, but fill them all out.
And if it doesn't apply, just put an A?
Yes. If it does not apply, make sure you put something in there, NA, or just a line through it or something, but let them know that this is not information that you're going to have to submit. Now, the one important to is, yes, you're pointing to that. Tell them what that is.
Loan number and name of the person that's on the mortgage.
Yes. You should have the loan number on the upper right-hand corner of every page. Now, why this is important is because this is going to be faxed or mailed to the bank. The bank at this point has hundreds, thousands of these applications coming in. A lot of them are being faxed. So if you don't have your loan number on every page, there's a good possibility that they could lose them. And if they lose them, then you're going to have to resubmit.
Okay.
Now, that particular RMA form has 3 pages. The second page has financial information on it. So you need to put down what your gross income is, your net income, what all your expenses are. Now, they're also going to ask you for another expense sheet. Now, on that expense sheet, that's going to outline more of your basic expenses than this form. But what is important is that your numbers on this form match the numbers on that form. Because if you have a gross income over here, you're going to have your gross income the same over there. If it isn't, they're going to throw it back at you and wonder why this information is not the same on both forms. And basically what this is these forms are broken down so that your expenses are monthly expenses. So you have to make sure that if you have a bill that you only pay every 3 months, break it down, what it would be for the 12 months. Now, if there's an item on here that you don't have an expense for, put down 0. You need something on every line here to indicate what your actual monthly expenses are and what they consist of. So you have that form plus this form. Now the bottom half of this RMA form is your ethnic background, and it does tell that you don't have to tell what you are if you don't want to, and there's a spot on there just say, you know, that you don't want anyone to know what you are. And we don't use that for any purposes. What it is that it's a government form, and they want to know just so they can track what nationality is actually applying for a modification. The page 3 wants the signatures, and it wants it dated, because they want you to sign this saying that you gave this information, it's true and accurate as well as you know. Again, every person that's on that the mortgage needs to sign and date it with the current date. And we did talk about the expense form. And the reason for this too is that you have to prove that that this modification is going to help you. If it's not going to help you, or you can't document in here how this is your finances now, and how by lowering this is going to make it able for you to continue your mortgage, they're not going to consider this. And one thing important that you should know is that your PITI, your principal, interest, insurance, and taxes, if they're all included in one, need to be more than 31% of your gross income. So if they're trying to get you at that level, so only 31% of your income goes towards housing. So that's another thing they're going to look closely at to see whether you qualify for the program.
Okay.
Now the next one is a very important part of this. This is your hardship information. They want to know why you need a modification. What's your hardship? Now, this form is set up with 2 columns. You have a column that's for the borrower and for the co-borrower. And you have questions here. You need to mark every one of those questions with an answer. So you're going to answer for you, and then your co-borrower is going to answer for them. And these are the indications of what caused your hardship. So that's just a check-off form. You have that. Then you have, again, they want to know your nationality, but again, you don't have to put that down if you don't want to. And then we come to the very most important part of this whole document, is your hardship letter. Now, you can't just say on there that, well, I need a hardship because, you know, my son's going to school and I have to pay for his college. That ain't going to make it, because you should have been planning for his college when he was born, not wait till he's old enough to go. So don't use college expenses as one of your items. What they're really looking for is acceptable hardships would be a divorce or a separation, military service, death of a family member, job loss, a reduction in your income, maybe medical expenses, an illness, or if you went to jail, you can't be working when you're in jail, a job transfer, or just anything that is a traumatic incident in your life rather than just going to school. And I'm not picking on people going to school. They should go to school, but it's something you should have planned for long ago.
This is not acceptable.
This is not acceptable. When you put in your application, you need to define your hardship. You need to say what your hardship is, whether it's long-term or short-term, what you're trying to do to correct the hardship yourself, and what you would like the bank to do for you to help you out. Either lowering your interest rate or maybe extending your loan so it's longer. But you need to give the bank an idea of how you can manage to do this, your mortgage, without losing it. So your hardship letter is very, very important. Although it shouldn't be a sympathy card type thing. You need to put things down there that actually are and you can do, and you want to keep your house, but you're willing to work with them to do this. Because you have to remember that when you took this mortgage, you signed on the line for that. You've made a promise that you were going to pay your mortgage. Now, if things have gotten a little problem in your household, you need to bring that to the bank's attention and treat the bank not as the enemy. Treat them as your friend, as you're trying to work this out with them for a mutual solution, because they don't want your house. They're going to have to do something with it if they get it. So think of that they're trying to work with you, and it may seem a little frustrating and it may take a long time, but you'll get through it, and hopefully if you work with the bank, they'll work with you.
And how long would this process normally take?
This process could take forever. Fortunately, you live in New York. So the foreclosure time frame in New York is it can take anywhere from 18 to 24 months to actually foreclose on a property. So we have a little bit of time that we can work on this, but it does take a little, it's not going to happen overnight that you get your modification. Because remember, there are thousands of people that want a modification. And they're going to have to review the documents and make sure everything is in place and that your information that you provide is accurate. So it's not going to be overnight, but what you need to know is you have to keep up with the process, which means that every month you have to send them your documents, your pay stubs, your bank statements,
updated,
to make sure that your file is updated. So don't wait on the bank to ask for these, because they won't. What they're going to do is they'll just close your file because you're inactive. You need to be the proactive on this, definitely proactive, and get your information into them. Now, some other documents that they'll ask you for right off the bat, and you're going to wonder why, because you think they have your current loan information, and they do, but they want this all in a packet so that they know you know. The underwriter will know exactly what you owe, how far behind you are, and maybe your mortgage, or information about it, what percentage interest rate you have. So send a current bank or mortgage statement with it. The other thing they want are 2 months of bank statements. Not just 2, but 2 months of bank statements. And the reason they want your bank statements, your savings accounts, your checking account, they want to see how you're spending your money. Are you going out to dinner at fancy restaurants? Are you going on vacations? What are you doing with your money? Why can't you pay your mortgage? So their bank statement is going to be a reflection of how you're spending your money. So when they ask you for your bank statements and they want current ones, make sure that you send them the current bank statement and
completed bank statement from page 1 all the way to 10.
Right. And if it doesn't have anything on a page,
still send it.
Send it anyway. So make sure your bank statements are complete. Then you have your income statements, because they want to see how often you're paid, who you work for, what is your income, and they're going to figure out what that is by sending the pay stub. So the initial application that you make is they're going to ask for 2 months of bank statements. That does not mean just 2 banks or pay stubs. That is 2 months. So if you get paid every week, then you better have enough to represent 2 months. If you're paid every 2 weeks, same thing. Make sure that is. If you're on disability or retirement, they're going to want to see that. If you're on unemployment, they want to see that, although they say right now that they're not accepting unemployment money, but we're still submitting it anyways. Then they also ask you for a utility bill. And the utility bill, you want to make sure that it comes in your name with your address on, that's your mortgage statement, because they want to see if you're actually living in your place that you want a modification on, because these modifications are for your primary resident. If it's a rental or a commercial building or something, forget it. They want it to know that this is the actual place you're living in. So the utility bill is usually sent to your home address and does state that you are there. Now the other thing they can do is the bank may send someone out to actually knock on your door and see if you're there, or to take pictures of the condition of the place. And if they do, they're doing that just to make sure that you are there living in it and that it is still in acceptable shape. And that is a Dodd-Frank certificate they're going to ask for, and that wants to know if you're if you have any kind of fraudulent activities in your record. And this is a new form that they just come up with, but you just both, or everybody that's on the mortgage needs to sign off on this and state and date it too, that you're not involved in any fraudulent